Hi, my name is Tina, and I'm the founder and chief number cruncher of Accounting Pros, and I'm really excited to talk to you today about the Payroll Protection Program. And this was actually recently passed through HR 748, the CARES Act. So it's Coronavirus Aid, Relief, and Economic Security Act. So you'll probably hear me interchange CARES for that, since it's a bit of a mouthful to say the whole title. And this is the thing we're going to be talking about today is Division A, Title I, Keeping American Workers Paid and Employed Act. And of that, it's Section 1102, the Paycheck Protection Program. And there are lots of other programs available within HR 745, aka the CARES Act, but we're going to limit our scope to just the Paycheck Protection Program today for brevity's sake, and I will be providing additional information on the other programs that could help you as an employer at a later date, so just stay tuned. And our objectives are really to understand what is this loan all about? How can you become eligible for this loan? Is your business able to take this sort of funding? How to calculate the loan amount, and there's a few little nuances there as well. How you're actually supposed to be using the proceeds. So what should you be spending the loan money on? What portion of the loan is forgivable? There's actually it's a pretty cool feature of this loan program. And how you can get approved with an SBA lender. So I'll go ahead and start with the loan information. So in total, there's $349 billion available for funding, which is great for you as a small business owner. That's a huge pool. And you can take a maximum of $10 million with this loan, but what they're really looking at is what are 2.5 times your average monthly payroll costs? And again, there's some nuance there. Or what is the outstanding amount of an economic injury disaster loan that's outstanding, one of which you've taken from the beginning of the year now. So keep that in mind. Cool benefit of this program is it's 100% guaranteed by the SBA. And the SBA actually normally guarantees like 85%. It really depends on the size of your loan and what type of 7A loan you might be getting. But this means that if you default on your loan, the SBA or the government will take complete ownership over that default. So it makes you as a borrower much more enticing to a lender because it essentially reduces any potential risk for you as a borrower. They know that they're going to get paid no matter what. There's also no guarantee fee, and normally the SBA does charge that because they're vouching for you and taking the hit, in case you do default. There's also a 4% max interest rate, which is really great for you as the borrower, and a max 10-year term as well. So you get to extend those payment terms out for up to 10 years. And there's some additional super mega bonuses. So there are no prepayment penalties, which is awesome. If your business starts to pick back up and you want to go ahead and pay that loan off, you don't have to be penalized for that. They're also waiving the collateral requirement that's normally required for SBA loans. And they're also saying that there are no transcripts, no tax transcripts that are needed for your loan. And the payment is going to be deferred for 6 to 12 months. So you don't even have to start worrying about that until later on down the line, and which makes it easier for you in terms of cash flow now. And as I've said before, the portion of the loan can be forgiven, and we'll be going through what portion that is. And finally, there's going to be some super quick turn times. And from what I've heard from my SBA approved lender, and according to the bill, it will be funded really quickly. I've heard as low as 36 hours after approval, which is great if you are in a cash crunch right now. So I bet you're wondering if your business is eligible. So let's go ahead and find out. So your business should have fewer than 500 employees. And there's a stipulation that those 500 employees are going to be full-time, part-time, or any other status. And normally we're looking at full-time equivalents, but this is everybody in the business. And that is for any small business or any 501c3 organization. You also need to make sure that you meet the SBA size standards. And size standards are really around the revenue that you generate and the number of employees in your business. And so I'll make sure to provide size standard information in my blog that you can go check in on, and also in the comments below. This is also open to other smaller businesses. So sole proprietors, independent contractors, and self-employed people will be included in this program. And also tribal businesses or 501c19 veterans organizations who meet the size standard will also be eligible for this program. And finally, they've extended some additional eligibility as well. If you have an NAICS code starting with 72, your employee count is per location. I'll have a full list of all these types of businesses that start with NAICS code 72 on my blog, but generally it's things like hotels, casinos, restaurants, etc. So if you have a very large organization with many locations, you only have to count the employees at your one location that you're applying for. So if you have more than 500 employees, but they're all in separate locations, you don't have to worry about that with this particular loan. And they are waiving some requirements for franchises. Normally they look at affiliate rules, so businesses that are affiliated with one another to get a max head count for that size standard. And it's not going to be applied here in this situation, which is really good if you are a franchisor. Additionally, whenever you are getting loans through this program, they're going to make you certify a few additional things. So let's go ahead and read this. Number one, you have to certify that the uncertainty of current economic conditions makes necessary the loan request to support the ongoing operations of the eligible recipient. So if your business has suffered an economic loss due to coronavirus and you need these funds because you're trying to navigate through these weird times, then yes, that would be something that you would say that you would certify. You also need to acknowledge that the funds are going to be used for the purpose of the loan. And again, that's paying your employees and other operating costs as well. So you'll need to acknowledge that the funds will be used to retain workers and maintain payroll or make mortgage payments, lease payments, and utility payments. And we'll be going through what will be allowed in that grouping of expenses to be forgiven, later on in this conversation. You'll also need to certify that the eligible recipient does not have an application pending for a loan under this subsection for the same purpose and duplicative amounts applied for or received under a covered loan. And what that really is saying is you can't take a loan for payroll costs if you're also getting a loan for payroll costs here. So you can't have lending out for the same purpose with two loans. That being said, they did mention in the articles that you will be able to refinance any existing EIDL loans that have been made this year. So if you've already gotten a loan, you don't have to worry about that. You'll have to choose between an economic injury disaster loan or a Paycheck Protection Program loan if you're using it for the purposes of paying payroll. So just keep that in mind. It's also important to note that I was applying for a small business loan through the EIDL program, and as of last week, the online portal was essentially gone. I think that they had way too much traffic. I've heard of some other weird things going on, with their back end. And right now, in order to apply for an economic injury disaster loan, you have to do the offline application. So you've got to download the documents and either email them or mail them or upload them. And I actually did those things, and I have heard nothing back from the SBA at all. So I actually don't even know if you've applied for these loans, if anybody has even seen them or when they plan on seeing them. I do know that list for the EIDL loans is really, really long. So I think if you're looking for fast cash in order to pay things like payroll costs and rent and mortgage and things like that, the Paycheck Protection Program is probably a better fit for you right now. The EIDL is going to have a much longer time to get funded, so keep that in mind. And they didn't list this on their, within the act, but typically these are the type of businesses that are prohibited from applying for funds through the SBA. So any business where gambling is 1/3 of the annual gross revenue. You do have to keep in mind that they did say that businesses with the 72 NAICS code would be allowed under this program. So whenever it's time to apply, just talk to your SBA lender and make sure that the original prohibited businesses, which are listed, in all of their documentation, does not apply to this particular program. Also, things like speculative agencies, agriculture enterprises, and we're in Colorado, where cannabis is legal on the state level, and the SBA is a federal program. So while they did not specify that cannabis companies are not allowed to participate in this program, my assumption is that it is a federally illegal, product, and you probably won't be able to get funding for that. I would definitely reach out to an SBA-approved lender to make sure if you are needing that kind of cash. But I have a feeling that you might be out of luck if you are a cannabis company. So just keep that in mind. Okay, so let's talk about calculating the loan amount. So if your business is brand new, meaning it was in operation January of this year and February of this year, that's awesome. You would qualify for this loan. But let's go through the list and see what that qualification is based on. So Accounting Pros has been in business since 2010, and we would fall under this first point. So if a qualified business was in operation for 1 year prior to the loan date, we would take 2.5 times the average total monthly payroll cost incurred during the year prior to the loan date. So if my loan date is, March 31st, which is coming up soon, I would look up March from last year to March now, and I would get the average of the payroll costs that are allowed in this program. If your business just started, so if it was not in operation in 2019, but you started in January, you'll look at your monthly total payroll costs for January and February of this year, and then you'll average that as well. And if you're a seasonal employer, it's going to be a little bit harder to gauge because the work is going to be up and down depending on the season. So you'll take 2.5 times the average monthly payments for payroll costs for a 12-week period beginning, and this is your choice, February 15th, 2019, or March 1st, 2019, and ending on June 30th, 2019. So the window is going to be a little bit smaller, but you have a little bit of flexibility in how you calculate your monthly payroll costs. And these are the things that you can actually include in your monthly payroll cost. So you've got salary, wage, commission, or similar compensation. And I highlighted similar compensation because I believe that is reflective of what information is in the payments to sole proprietors, independent contractors, and self-employed individuals. So that's my assumption. Payments of cash tips or equivalent, payments for vacation, parental, family, medical, or sick leave, allowance for dismissal or separation, payments required for group health benefits, including insurance premiums, payments for retirement benefits, so 401k matches, simple IRA matches, etc., and payments of state or local tax assessed on the compensation of the employee. So I highlight this because from what I'm reading and what we'll be looking at in the excluded cost is state and local tax should be included, but federal tax is likely to be excluded based on the language. And if you paid someone who is a sole prop, independent contractor, or self-employed, then you'll take the sum of the payments of compensation to that person, but it cannot be over $100,000 in 1 year. So just keep that in mind as well. Okay, so what is excluded? You'll need to exclude any compensation for people who are paid over $100,000 a year. You'll also need to exclude federal payroll taxes, railroad retirement taxes, and income taxes. Any compensation of an employee whose principal place of residence is outside of the United States. And I have had a lot of people ask me, does this apply to foreign contractors? And based on how I'm reading this, I would assume that in the spirit of the act, they want you to pay U.S. people so you can get American workers back to work and paid. So while you should be asking this question to your SBA-approved lender, my gut tells me that you're only going to be able to take any of those costs for people who are in the United States. And finally, qualified sick leave and qualified family leave wages where you have received a credit under HR 6201. And I recently did a video and a blog about that, but HR 6201 will pay your employee either all or part of their pay for a set period of time. And as an employer, you'll be able to take a payroll tax credit on the Social Security portion of their taxes on the employer side. So if you're trying to get a credit with HR 6201 through those programs and this program, you're going to be out of luck. You should not be double dipping. That's what they're trying to avoid here. So just keep that in mind. We're going to go ahead and take a look at how this max loan amount would be calculated. And this information should be in on your income statement, in your accounting software. We use Xero. You might use QuickBooks or even a spreadsheet. You're going to need to back this information up with documents like your W-2s or 1099s or any of your payroll reports from your payroll provider. So just keep in mind that you can't overestimate this. You need to make sure that you're exact because they are going to be asking for information to prove this up. So if I have paid my employees, and again, nobody over $100,000 for a year, $1 million, then I would include those wages here in my calculation. I also paid federal employer payroll taxes for $62,000, but you'll notice that I'm going to go ahead and remove that when I'm calculating my max benefit. I've got state employer payroll tax wages, which is taking my wages times my state tax rate. I'm paying a simple IRA, so I'm taking wages times the employer match. In this case, it's 3%. I'm also taking the health insurance premiums, and I'm adding this as well. So in total, my total payroll costs are $1,169,000. But I'm going to go ahead and take out that $62,000. So really, it's $1,107,000, which is all the includable costs. I'll take that number, I'll divide it by 12, which comes out to $92,250. And I'm going to take that number and I'm going to multiply it by 250 or 2.5. I need to get 2.5 times the cost. Here, my total maximum loan amount can be $230,625. So make sure that you have a system in place in order to track this information. You should have an accounting software. If you don't and you're feeling like you have to scramble right now, even just putting this information in a spreadsheet would be enough for you to get a gauge on what those payroll costs might be. And I'm happy to provide that as a resource. I'll include that as those template documents in my blog and also in the comments as well. So you can download something and just mess around with the numbers and get a good idea of what you may qualify for. So I'm going to go ahead and show you how we do this in Xero. You may have another program, again, QuickBooks or even a spreadsheet, but Xero is my favorite program. I'm going to show you how to make a grouped income statement that will parse out those payroll costs and give you an idea of what you may qualify for based on the information in that file. So let's go ahead and hop into Xero. Okay, so I'm in my Xero account and I have filtered for a year's worth of information, and my job now is to group everything together using the format editor. So once you're in your income statement, and this is the new income statement in Xero, you're going to click Edit Layout. And I've already done some of this work for you, so it goes a little bit faster. But in order to group things together, you would click Rows and then Groups. And I have grouped all of my expenses related to payroll costs. So I want to make sure that I name this so I know exactly what it is. But here I've got things like my salary, so direct labor, indirect labor, subcontractors, assuming that those are going to be allowable, any of my benefit programs, my payroll taxes. And again, it's really important to separate your state payroll tax from your federal payroll tax because it looks like federal will not be included in this calculation. So I've got a few more things here to add. And once I'm done with this, I want to make sure that I'm going to get the total amount of the expenses for this year period. And then I want to find the average because that's what we're going to use to get our max loan amount. So I'll go ahead and create a column and add a formula. I'm going to have my formula here is going to get the average. So it's going to be everything for this year period divided by 12. And then I'm going to call this my average. And then next, I'm going to take my average and I'm going to multiply that by 2.5. So I'll go back to columns and then formula. I'm going to take my average and multiply that by 2.5. And this is my max loan amount. And then when I'm done, I'll go ahead and click Done. Okay. So all I'm going to be thinking about here is all of my payroll expenses. I'm going to ignore everything else here. I don't care about anything else here. Advertising, promotion, bank service charges, none of this stuff will matter. It's not going to be included in my payroll cost. I've got my direct labor, indirect labor, my all of my independent contractors as well. So in total, I've spent $1,178,144.60 in a 12-month period. When I take this and then I divide it by 12, on average, I'm spending $98,178.72. If I take that and multiply it by 2.5, my potential loan amount will be $245,446.79. So of course, this is going to be, maybe different depending on your business, and you will need to provide the documentation to prove this up. But if you're just trying to get it quick and dirty, what is my potential max loan amount? Creating a grouped income statement within Xero is really simple. And the last thing to do when you're done is you're going to save this as a custom report. And I'm going to have this as income statement, max loan amount. And I'll click Save. And should I ever need to find this again, I would go back into accounting and then into reports, which is where I found this report to begin with. I'll go over to custom at the top, and then I can find my max loan amount here by just clicking in. And if I want to star this report, that'll show up on my list of reports within Xero. And then you can also go back and filter the dates to be a different date should you change the loan origination date. But this should give you a really easy way to calculate that max loan. Okay, now I've got you really excited about what your max loan amount is, how you can potentially calculate that in your zero accounting software or another software. But now you're going to want to know, how do I actually spend this money? What am I allowed to use these funds for? And really, again, it's all around payroll and keeping the business going. So payroll, commissions or similar compensation, group healthcare benefits, mortgage interest, not the mortgage principal, and that mortgage should have been in place prior to February 15th, 2020, which is when the covered period for this program begins. So keep that in mind. You can also use your rent as an expense as well. And the rent agreement should have been in place prior to February 15th, so keep that in mind. Utilities are the same, that needs to be in place already. And interest on any other debt obligations, so any other loans or lines of credit that you may have. So keeping in spirit with the Keep American Workers Paid and Employed Act, you should really use the funds for what they're intended for. So make sure that you're not going out and using this money in ways that you're not supposed to. So don't go buy cars and don't go and buy a new building or anything like that. Just spend the money on what you're supposed to be spending it on, which is payroll and any of those other allowable costs, mortgage interest, rent, etc. And I highly, highly recommend that you have another bank account in order to track this money, because you're going to want to get that forgiven later. So forgiveness, so free money. So borrowers are eligible for loan forgiveness equal to the amount spent on the following expenses during an 8-week period beginning on the date that the loan was originated. So the loan is originated and money's on the way to you, that's when the clock starts. So these are the things that you can be forgiven for, and this really goes back to what the loan should be used for. So it's the same exact stuff. So payroll costs, mortgage interest, again, not the principal, and that mortgage needs to be in place prior to February 15th. Rent, utilities like electricity, gas, water, transportation, telephone, or internet, and interest on any other debt obligations. So again, don't go out and spend a ton of money on things that are not going to be forgiven, because you'll be stuck paying for this loan forever. They really want to give you a leg up by providing this forgiveness, so use it as it was intended. And another note, forgiveness cannot exceed the loan principal. So let's say that your payroll costs go up, yay, because you're hiring people to replace those that you might have lost, etc. If you hire 10 more people versus the 2 that you were lost, that's not going to be allowed. They didn't base that calculation on hiring a ton more people. They base it on what was historically true in your business, and then moving forward, what those expectations are as well. So let's say that you had 15 employees last year and that cost was some amount, and this year you got excited because you got a check in your hand and now you want to hire 40 employees. No, you can't get the forgiveness on more than what you borrowed, because that would be crazy. So let's go ahead and calculate what that would look like if you're asking for that forgiveness. So let's say that you've got payroll wages of $150,000, state employer payroll taxes of $2,550, your simple IRA for $4,500, your health insurance for $10,000, your rent for $5,000, and then you've got electricity at $800, telephone at $500, cable internet at $300, gas at $250, and interest on your other debt obligations for $500. So your total potential, and that's important, your total potential forgiveness is $174,400. So I'm going to show you how you can create a report in Xero, again, using the grouped feature and their income statement, so that you will have a good idea of what will be forgiven when it comes time to ask for that forgiveness. And I will also include in that spreadsheet another tab for how you can calculate that loan forgiveness as well. Okay, I'm back in my fake Xero file, and now I'm going to create a grouped income statement that will show me my forgivable or potential forgivable loan amount. So I'll go over into accounting, and I'm going to go to reports, and I'm going to find the report that I've made previously and edit it to create a new custom report. So I'll go into custom, I'll find my income statement max loan amount, and we know that we can also include things like rent and interest for mortgages and other loans as well. So I'm going to go in here, also utilities, so let's not forget that. And I'm going to adjust this. And let's just say that this is for February and March. Let's just pretend that's an 8-week period. I also know that I have information in here in this fake file, so I don't have to go scrounging for information, but I'll click Update here on the top and then go back to Edit Layout. And now I'm going to group additional expenses in the payroll costs and rename that group. Okay, so I'm going to change the name from payroll costs to loan forgiveness. And then I'm going to grab my rent expense and my utility expenses and any interest. Let me find that and I'll throw it into that new row. And then I'm going to delete the average and the max loan amount and then click Done. Okay, so then I have all of my expenses here, all of my payroll, all of my contractors, and all of my rent and interest expense grouped together. So my total potential loan forgiveness in this case is $184,900. Again, this is fake information. Your file is going to be different, but this will give you a good idea of what you could potentially get back on your loan, so you don't have to pay the entire balance. Okay, so you might be wondering what might reduce the loan forgiveness. The two main ways that your loan forgiveness amount will be reduced is if you have reduced your headcount or you have reduced your salaries and they do not go back up to your pre-corona or pre-loan levels by June 30th of this year. So let's go ahead and walk through what that calculation looks like. Okay, so you're going to take the average number of full-time employees or FTEs per month in the 8 weeks beginning on the loan origination. So if you got your loan starting on March 31st, then you're going to look from March 31st plus 8 weeks and find the average of your full-time equivalents. Then you're going to divide that by the average number of full-time employees in a prior period. And you have a few different options for how that number is calculated, and this is really up to you. So it's the average number of full-time equivalents per month from February 15th, 2019 to June of 2019. Or option 2 is the average number of FTEs per month from January 2020 to February 2020. Or the average number of FTEs per month from February 2019 to June 2019. So that is a choice you're going to have to make, and you'll have to look at your headcounts to figure out what works best for you. But in this case, I have 18 FTEs now divided by 20 FTEs in my prior period. So I've retained 90% of my employees, which means that I will have a 10% reduction in my loan forgiveness. So let's go ahead and calculate what that looks like. Previously, I told you that the potential loan forgiveness is $174,400. But I need to reduce 10% because of my reduced headcount that did not go back to its normal levels. So the adjusted loan forgiveness in this case would be $156,960. So previously, my loan amount was $230,625. If I take $230,625 minus my adjusted loan forgiveness, then that means that my adjusted loan amount is $73,665. So it is in your best interest to either rehire your old employees or find another employee to replace them if they're no longer available. You need to make sure that you have the same number of FTEs in the current period that they're looking at against the prior period. So again, don't go out and hire 1,000 people because you've got money in the bank and it feels good to spend that money. You just need to make sure that you're replacing the people that you have let go previously. And it's important to note that that cutoff is June 30th, 2020. So even if you aren't able to rehire people immediately, you do have a deadline that's pushed out a few months, so just keep that in mind. So what if you have not reduced your workforce but have reduced people's pay? So we'll need to find out what the previous period pay was and the covered period pay is, figure out the difference between that compensation, and then anything over 25% will reduce your loan forgiveness. And I used really simple numbers here, so hopefully it's easy to follow along. These numbers might not be reflective of how you pay your employees, but let's just use this, for demonstrative purposes. And in this example, I have 3 employees. I have Joe, Bob, and Jane. Joe was paid $9,000 in our previous quarter, but this quarter they were paid $7,000. So that's a $2,000 difference, which is 22%, which does not go over the 25% excess reduction maximum. And then Bob used to make $12,000. Now he makes $8,000. So that's a 33% difference. So he is 8.33% over the 25% max. So in this case, I'm going to take 8.33% and multiply that by 12,000, so the previous period, which gives me their $1,000 forgiveness reduction. And then Jane was paid $15,000. Now she's paid 9. That's a difference of 40%. The excess over 25% is 15%. We'll take 15%, multiply that by 15,000, and that gets us to $2,250. So, in essence, your loan forgiveness amount will be reduced by $3,250 if that's the route that you took. Now, keep in mind, it's not an either-or situation. You don't get to pick, what is most beneficial to you. If you've reduced salaries and you've reduced your headcount, then you'll need to make sure that you get everybody back to those levels, and whether it's salary or headcount, so that you do not get dinged when it's time to get the loan forgiven. So just keep that in mind. And I want you to put a big star on your calendar. Make sure that you do not miss this deadline. I've said it 1,000 times in this talk, but June 30th, 2020 is the last day to get everybody back up to their previous salary levels and your headcount back up. So you have a little bit of runway, but do not miss that deadline, or you will have to pay the loan back for the difference. So don't forget. All right, so you're probably wondering how to apply for forgiveness. And this is something that's not totally automated, so you will have to be on top of it and make sure that you don't make a mistake here. But you're going to have to request that the loan is forgiven to the person who is servicing your loan. So your loan may not be serviced by the person who originally made the loan. They might have sold your loan. So again, you'll need to go to whoever's currently serving your loan. And you'll need to provide documentation that shows the number of full-time employees on payroll and their pay rates, again, making sure that your loan forgiveness amount is correct. So that's things like payroll tax filings, state income tax filings, things like that. And I highly suggest you just create a folder. We use Box for all of our document management. Just create a folder somewhere that's pushing this information there. So when the loan officer asks you to prove this information up, there's no question about where you got that information from. When it comes to mortgage, lease, and utility payments, you're going to need to get things like canceled checks, payment receipts, or account statements. I don't write checks. I haven't done that for a really long time. Most of my payments are through ACH or credit card. So in my case, I'll probably go ahead and log into my utility site and I'll grab a statement. I'll even look at my bank statements and find those utility payments. And again, I had recommended that you get another bank account. I'm going to say that again and again. Super important, so that there is a really clear audit trail of how that money is being used. And you'll need to certify that the documents that you're providing are true and correct, that the amount for which the forgiveness is requested was for the purpose of retaining your employees, making those interest payments, not principal, making payments on your rent, or those covered utility payments. So you will have to say, this is what I've done. So be sure that you're ready to certify that, and again, provide that information. And then even if you do everything right, the Small Business Administration may come back and say that you need to provide additional information. So this is not going to be a totally complete list. That last bullet point is in the law, so just be ready to prove everything. And the lender has 60 days to review your request. So it's not immediate and it's not automatic. So you'll need to make sure that you give yourself enough time and that you're properly prepared for that. And from what the tax code says, the amount of the loan that has been forgiven will not be included in the gross income of the borrower, which is awesome. So you're not going to get taxed on it. And I'm saying this point again, please set up a second checking account. Just have it at the same bank. So if you need to transfer money back and forth when that loan funding arrives, etc., that would be super easy. But just, don't make the mistake of having all of your records really muddy and unclear. You want the loan officer or whoever is going to be approving this loan forgiveness to look at what you've done and say, oh, it's a no-brainer. They've used the money exactly as intended by the program. They've followed everything to the T, and I'm going to forgive 100% of their loan. That would be the most ideal situation. And now, how do you actually get approved for this loan? Where do you need to go? So first of all, the SBA and this act have made lending really, really enticing for SBA-approved lenders. And they're actually paying the lenders on the back end based on the loan amount. So if it's $350,000 or less, they're going to get a 5% commission or repayment based on your loan amount. If it's $350,000 to $2 million, it's 3%. $2 million and more, they get 1%. So they are super interested because they're going to get paid by the SBA no matter what. They're also going to be making a priority for businesses that are in underserved areas or rural markets. veterans or members of the military community, businesses that are owned and controlled by socially and economically disadvantaged individuals, businesses owned by women, that's me, and businesses in operation for less than 2 years. So if you're on that list, you will get priority in this funding. But again, the SBA has made it super enticing for an SBA-approved lender to get that cash out the door. In addition to this, they are going to be waiving things like personal collateral, which I mentioned before, and personal guarantees. You do not have to personally guarantee this loan. And at the beginning of this talk, I said that the SBA will be guaranteeing 100% of the loan, which means that you are a no-risk borrower in the eyes of your SBA-approved lender. Again, no prepayment penalty, so you don't have to worry about paying that off early and getting dinged. And they have removed the typical time in business requirements. The normal requirement is that the applicant has to be in business for at least 1 year prior to the disaster. So with the SBA Economic Injury Disaster Loan, or EIDL, there's a form, the P019, that will ask you how long you've been in business. And that's one of the questions. Have you been in business for 1 year prior to the disaster? In this case, you're super lucky if you're brand new and you have payroll costs. They're actually making it easier for you by reducing that requirement to businesses that have been in operation from January of this year. There is a clause in there that you are not required to provide tax return transcripts. And a biggie that I hear from everybody: what happens if I can get credit elsewhere? I've been told that I'm going to be denied if I can get credit elsewhere. That is absolutely not the case. The Act says that during the covered period, which is starting February 15th, 2020 and ending June 30th, 2020, the requirements that a small business concern is unable to obtain credit elsewhere shall not be applied to this covered loan. So if you have access to other funding, not a big deal. They're going to waive that in this case, so don't worry about that. And also, something that I want to just shout from the rooftop: SBA-approved lenders have been delegated authority to make loans without SBA review. So that means that they have the authority, if they are part of this lending program, that they'll look at your information and they decide whether or not you're qualified for this loan, which will severely take down that lead time to get funding. And as I've heard, you can get funding in as little as 36 hours, which is like exactly what you would get from the SBA small loan program, or the express loan program. So this is really good news if you need to make cash, get cash in the bank for payroll like this week. However, this program has not been open for applications yet. The requirement from the Act is that they need to have their ducks in a row 15 days after the Act is signed. In talking to my lender, they told me that they should have applications up by the end of next week. So in order to prepare, make sure that you've got your payroll costs well documented and get that all in a good spot so that you can be ready to send this to your SBA lender once it's time. You'll also want to get your payroll tax filings, your head counts, your salaries, so that you can see, what's changed from last year to this year, and then an explanation of why you need this. And again, this is really intended for businesses that have faced some hard times because of COVID-19 coronavirus. So if your business has not had any problems or anything, like everything is just smooth sailing, you're one of the lucky ones out there, I would say you're probably going to have a harder time getting approved for this sort of loan. You can still go for it, but they're going to prioritize people who actually need it. So just make sure that you're leaving funds available for the people who actually need it. But that loan process from beginning to end, once they actually open the applications up, should be a breeze. And if you're considering getting an economic injury disaster loan that was previously offered, so in the first round of funding, or the economic injury disaster loan that's wrapped into this whole act, you might want to consider that this is going to be the easiest to apply for because you don't need collateral. You don't have, it's 100% guaranteed. You don't have to worry about providing tax transcripts, and the length in business time has been shortened. This might actually be a better program for you. And I'll be providing some other information and another update about those grants that are available through the new EIDL wrapped into the into the CARES Act program. So I won't be diving in there right now, but if you're thinking about timing, for example, the PPP, the Paycheck Protection Program, is probably the one for you. So just keep that in mind. And again, the application should be ready 15 days after the bill was signed, which it was signed on Friday. So if you have any questions, I'll be available on Facebook and Twitter and email or whatever. You can reply in the comments. You can book a call with me. I am making these videos because I really feel that if I can provide the most resources, like most up-to-date and best resources for small business owners, that you are more likely to stay in business. That will positively affect your community, meaning more jobs stay in your local community, so you don't have to worry about people getting laid off and creating a lot of negative stuff in your local environment and your local community. This is only to help you grow and get what you need right now. So not asking for anything else. If you want to work with us, great. I really just want to make sure that you have the right information right now. So reach out to me if you need anything. I'm here for you. Thanks.